Hey traders out there, hi, Tony Daly, and today's trade I am looking at the spiders. Here's a weekly chart of the spiders. And then, of course, we see the uptrend and we see the 20 exponential holding and bouncing every time. Looks to me with this topping tail over here, the market seems to be a little bit tired on the upside, dropping down to a daily. Kind of seeing a little bit of chop, as you know, what we've had over the past couple of weeks. We don't have a lot of definition in my rainbow moving averages, but what I am noticing is that I'm going to go out on the limb and call 175, which would be a new high. Should be some major resistance up there. So I'm going to thinking of the 175 as my high point, and on the low point, it looks like we have some great support down here in the mid 160s, 164, 166, even 163. So that being said, I will go to the Analyze tab and take a look at the strikes that I have selected. We're basically looking at the 175, 176 short call spread for November. Okay, we take a look at that up here. It's a credit of 26 cents. So with the credit of 26 cents, we're only one wide, so we're capturing about 25% of the spread. And like the rules say on the strategy, we only need 74 cents on the put side to cover it to make it a riskless trade on the upside. As we saw before on the charts, looking at 164, 163, 21 delta is a 163, which is trading 108 to 109. So I am going to lock those in. And if we combine them, we could see 108 and 25 is $1.33 if we can get it. And we do that I'm going to do 5 contracts of those. And basically, like I said, my risk, I have zero risk to the upside. If we take a look at the risk profile on that, it's not your typical risk profile. If I take off the short put, we're basically looking at a vertical spread, and adding the short put, you could see on the call side there is no risk. Okay, very important that you see that. Our risk to the downside would be beyond the short strike where we could be assigned stock, but again, we can take contracts off. There's various adjustments that we do. I don't hold this thing to expiration. I hold this thing till I get about 50 to 60. I kind of gauge it by how the market is moving, but I like to walk away with 50 to 60% of the total risk on the trade. So I take a look at the margin. That's typically what it costs me to put this trade on, and I like to try to get 50 to 60% of that. So anyway, that's the trade. Again, it is the 175, 176 SPY bear call spread, and we're going to put a short put or at 163, which would make it our wingless iron condor trade for a credit of 133. And that's what we will collect, and we will manage it from there, and we have no worries to the upside whatsoever. Our only stress points is below 163 or 162 and change based on the credit. Okay, if you have any questions, drop me a line. Hope it helps, and good trading.